want to talk about Lyft?
Well, let's talk about Lyft.
All
Maybe
right.
we'll need a Lyft here because we've got 3 sales so far.
Okay. Lyft is the car. What do they call it? What do they call it? Ride sharing.
Ride sharing.
Thank you. Symbol LYFT, software application industry. I guess that's where they fit. Short on the float, 10.8%, 85% institutional owned. Not a great start, which doesn't surprise me. PE ratio 112 versus 128 for the industry. Price of sales looks good though, 1.2 versus 7.4. Price to book value 8.4 versus 7.7. Price of cash flow looks good, 7.2 versus 34.6. No PEG ratio. No earnings for the past year for Lyft. The industry was up 12.3%. Oh, sales for Lyft climbed by 27.3%. That's a huge bump in their sales. Analysts, another strange number here, five-year earnings per share growth estimate for the analysts, a negative 165%. So they're not looking for any growth. They're looking for a decline in earnings, which I don't get. We'll talk more about why, because I think this is a growing industry. On the balance sheet, we'll take a quick look there. Current ratio 0.8 versus 1.9. I'm kind of okay with that. Debt equity 1.4 versus 0.7. Kind of okay with that if they got some other things going on. It depends on the cash flow. Net profit margin is 1%, so they're profitable at the absolute bottom line, but the industry's at 10.8%. Return on equity 6.8 versus 15.9. Cash flow $920 million. I mean, it's not as bad as it used to look. I don't know what you're going to give me going forward, but I'm kind of opening to listening because maybe some positives here.
Yeah, I mean, it looks interesting. And I say that because the current price is $16.77. And here's another, I'm going to call it a tech darling that really has faltered. I mean, it kind of looks like it came public in 2019 around $78 a share.
Let's buy those IPOs.
Yeah. And it then fell during COVID, obviously. Then it rebounded back into the high 60s. And again, now it's back around $16.77 is that current price. 52-week range, though, $8.93 is a low. So it really fell down there quite low. And the high here, $19.07. We go forward for this company out to December 2026. I see estimated earnings per share of $1.38. Gives us a target sell price here of $22.91. That is a forward PE of under 12 times. I mean, it's a good value, and you're getting earnings growth this year of 19%, earnings growth, or I should say, you're getting estimated earnings growth this year of 19%, and estimated earning growth next year of 22%. So it's growing earnings. You're getting a decent value here. I think it's intriguing.
I got a question mark on my face because I think you said the earnings you're getting from Seeker Alpha is
$1.38.
38. Now I look at Stock Rover. Going out to 2026, 43 cents.
Interesting.
Yep, and they have 32 analysts. One says 0 for the earnings going forward. 79 cents is the high, and 32 analysts. So
I got 15 analysts.
so maybe you don't have the ones that don't like it as much.
Yeah, so I mean that's why we do use 2 software programs to kind of provide a nice check and balance. So that would throw a wrench in the plans over my excitement over Lyft. I will say from an economic standpoint, though, there was some good news out of the stock, and they reported last week, and the stock surged 24% or something crazy. It was a huge increase in the stock price. But the thing that I thought was interesting, and this was from the CEO, again, talking earlier in the show about hard data versus soft data, we look at the CEO from Lyft. He said he doesn't see anything to worry about despite widespread concerns of a slowing consumer amid ongoing economic uncertainty. He said, our team is stronger than it's ever been, and the consumer demand is absolutely there. And that was based off gross bookings growing 13% from a year ago. And the number of rides, I don't understand the difference between gross bookings and rides. You don't own the company, so interested in the difference there. But rides grew by 16% compared to last year. So they're seeing growth. And again, if you're not having a growing economy and it's slowing, in fact, you're not going to be seeing more rideshare activity, especially right. Ridesharing's been around for so many years now. It's not like it's a new hot thing. That to me is a positive for the economic growth.
And I do see that industry growing. I'm disappointed that I can't say buy it because of the 43 cents. But I think it's something that is a growing industry. Maybe it's just too early yet, but I do see the day that they'll have the robo-taxis. That's not going to prevent it from coming. That is on the way here. And I've heard, I think Elon Musk or somebody said it's going to be here in a year or two.
Yeah, and he's been saying that for what 5 years though, 6 years. So
One of these times he'll be right.
one of these times he'll be right. I will say they did announce a $750 million stock buyback, and it's all relative at the end of the day. That sounds small when you compare it to Apple, but their market cap here is about $6.8 billion. I mean, that is over
10%.
10-12% of that outstanding shares. I mean, that is a sizable buyback. But the big thing I want to look at with this stock in particular, you talk about the autonomous. What is their plan here? I mean, because you have Waymo. Is Waymo going at it alone? Is Tesla? Are they going to utilize a Lyft? Or are they saying, no, we're going to partner with Lyft, or are they going to do it themselves? I mean, if they do it themselves, Lyft could totally get kicked out of the equation there.
I don't think they can do it themselves, because I think the big thing that Lyft and actually Uber have as well is the data that they have that they can use to do the robotaxis. So, unfortunately, gosh, closing bell comes too quick.